Hello and welcome everyone to this morning's daily market report brought to you on behalf of CommunityFT for members of CommunityFT, in which we will look at some potential market movements to come over the next 24 hours. But before we do that, let us all take and embrace a quick risk warning at this point. So if we can familiarise ourselves with the information in front, engage as much as is possible, simply so that hereafter any decisions you do make are of a fully informed nature. On the cards for us this morning, let us take a look at some economies, the value of those economies as is reflected by the current value of their currency. Let's also take a look down at some energies. So let's change to the platform then for a more detailed inspection. So on the slide previously we were looking at the sterling and talking about some announcements, economic announcements today. A chart to help us analyse the impact of that or expected impact would be the sterling US dollar chart. And that's what we're looking at right now, or cable as is known by traders. Okay, it looks like there's a lot of stuff going on here. Let's declutter that and let's look at this on a step-by-step, case-by-case basis. The first thing here, these green bars effectively simply signify the bullish volume as is in this particular market with this particular liquidity provider. What that means is the amount of orders to go long, so the amount of demand for long positions, which of course then affects the demand for the currency itself, which can affect the price. Furthermore, we also have the Fibonacci retracements. Now, here's the recent high and here's the recent low. And what we see is the market has obeyed the key levels within the Fibonacci with a little bit of deviation, but for the most part has. Now, what will be key to observe is whether or not it obeys the 23.6 mark here. And it looks like there's a doji right now as we're looking at this chart on the particular market. So depending on where the levels are, or depending on whether or not this closes with resistance or support, I should say. So if the 23 mark closes, or if the market closes above, I should say, the 23.6 mark, then we will have established resistance, let's say, or support at that point. And of course then we can look to scalp the Fibonacci retracement in the meantime. Furthermore though, and another key point on this particular chart is the oscillator. The oscillator will be a great tool in helping us to let's say, confirm those Fibonacci retracements. And a very subtle and let's say, smart way or shrewd way of doing that would be to use the stochastic oscillator for confirmation. So let's take a look down at another chart, okay? Now what we're looking at now is the daily chart of crude oil. Can anybody guess why this is of interest today? Okay, well, the reason being is the inventory announcement is to be released. Now what that directly shows for the US reserves is the exact amount of supply in the market at any given time. And we know with commodity markets, it's a very, very basic form of supply and demand which affects price. So depending on where those levels are, of course, there could be a huge price shift. And that's pending today as well. Furthermore, when we look at this from a technical perspective only, the commodity channel index set to a 100-day period and the 100 or 55-day exponential moving average seem to be particularly accurate with backing one another up with regard to trends in this particular market. And we look for those trends as follows. On the commodity channel index, if it breaches below or above the index or outside, that could be a sign of when the market is rising, on the rise, or about to fall. Similarly then, also with breaching below and then retracing up above could be a signal for exiting, let's say a downtrend or a short position we had entered around this particular area here. There is one slight thing that's not great about that. It's somewhat lagged. And all of these retail indicators, they can be good, coupled with some very strong backtesting and risk management, but overall they're a lagged indicator. So what we've developed here at the Academy of Financial Trading effectively then is an indicator which doesn't show a lagged position, rather it catches movements as they happen rather than a delayed movement, of course even including confirmation in the same. So we hope that has been of help, everybody. If you've any further questions, please do not hesitate to get in touch. We welcome all inquiries. We'll chat tomorrow, and as we say here, keep learning and have a good day.